joining us for another session of the Pipsoclock webinar. If you can hear me clearly, please put a message in the chat box. I want to be sure you can hear me. Just type, I can hear you. I can hear you. I want to be sure you can hear me so that we can get started this afternoon. Good. Thank you so much for confirming. Thank you so much for confirming. You are all welcome to another session of the Pipsoclock webinar. We started a series last week. We are looking at the for-profit pooling Forex trading strategies. For-profit pooling Forex trading strategies. Last week, we looked at the trend following strategy, trading strategy. And if you were part of this session, I want to believe you agree with me that it was an educative session. And if you missed it, the recording is available within the Pipsoclock member area. That's pipsoclock.com/member. So you can just log in with your email address and your Pipsoclock password to access it. And if you can't remember your Pipsoclock password, you can just use the forgot password button. Also, before the end of today's session, I will share the link, the direct link, also for you to watch the replay for last session's webinar on YouTube so that you can catch up with that. So today we are looking at another very interesting topic. We are looking at the breakout trading strategy, the breakout Forex trading strategy. So this is the strategy we would look at today. And before I hand over to our facilitator for today, I want to quickly pass some information to you. We will continue. We'll have another session in the series next week, Thursday. So next week, Thursday, we'll be looking at the range trading strategy. And the last Thursday in the month of May, we'll look at the news trading strategy. This strategy are strategies that can help you to make consistent profit from the Forex market. Once you follow through, you practice it, you practice it very well and choose the one that best works for you. So I want you to be a part of all the series during this period. You will always get our invite emails, and it's 12 p.m. every Thursday. Okay. Is the audio clear now? Is the audio clear now? All right. As you might know, this series of webinar, or this webinar, is hosted by Pipsoclock. Pipsoclock is a community of Forex traders. We help traders to become better, successful, and profitable traders. And what we do is we support the trading activities of our clients by providing educational webinars like this. We also provide signals on our Telegram channel. Then we also have video tutorials inside the Pipsoclock member area. And there are a lot of benefits for being a member of our community. These are some of the benefits that I've also shared with you. Also, when you trade with our recommended broker, that's the skilling broker, you also have bonuses and other things that you can benefit from. Currently, there's an ongoing $30 welcome bonus for those that have not made their first deposit with skilling. And there is also an 100% bonus for clients that deposit either $50 or $100 into their trading account. There are a lot more benefits that we'll share with you in the course of this webinar. We will do that at a different time. But I want to get us started quickly into the main content for this session. We have Mr. Ifeanyi Uche in the house who will be handling this session. He's an experienced businessman, a Forex coach, and also a trader of many years for over a decade. If you have been in the game for a while now, you probably come across you would have come across his training, or you would have been inside his class. So he's here with us and he will be handling the session. There is also the time for question and answer. So while the session is going on, please document your questions. You can put it in the message. We will take your questions and answer every one of them. Also, during the question and answer time, you can signify by using the hand raise icon, so that you can unmute and also ask your questions directly. Once again, thank you for joining us for today's session. We'll get started now as I hand over to Mr. Ifeanyi Uche. Mr. Ifeanyi, you have the floor now.
All right, thank you, Lekon. Thank you very much. Good afternoon, everybody. Good afternoon. I'm happy to be here, and I'm glad you are all here, and I trust trading is going well with all of you. And I want to also trust that today we learn something new, or maybe an improvement to whatever we know already. Okay, so while I present, I will also be learning along. So let's just pay attention and see what we can grab out of what we have in store for today. So like Neko has already introduced, we will be dealing with a breakout trading strategy this afternoon. So I want to share my screen quickly to the first. I will show us my presentation content. Then thereafter we'll go to demonstrate or see some example on the chart. I believe you can see my presentation slides there. All right, so if you can see my slide, could you just, and you are hearing my voice clearly, could you just give me a 1 in the chat box? You can hear and you can see my screen. Give me a 1 in the chat box. Thank you very much. All right, Emmanuel, I appreciate you. Okay, thank you very much. Okay, great. So we will get down to it immediately. This is a step-by-step guide for profitable trading. Now, every strategy we present is geared towards helping us become profitable. All right. And there's one thing we need to understand also. I see profitable trading is who you become. Profitable is you have to become a profitable trader rather to trade profitably. You have to become a profitable trader to trade profitably, and the becoming side or part of it begins in your mind. So whatever strategy that we learn each time, it's important that we begin to think about it, think through it, analyze it, process it in our mind, begin to implement it in your mind, and then go to practice it on your charts. And gradually, mastery will set in, because mastery comes through practice. All right, so we are going to be looking at that. So, and we are going to be covering the following. We're going to be covering the following here. What is breakout trading? Then we'll look at the key concepts in breakout trading, and then how to implement a breakout strategy. And then we also consider common mistakes to avoid. So these 4 things will be staring us in the face as we go through them. Okay, so quickly, theoretically speaking, when you talk about breakout trading, it focuses on identifying trading moments when prices of instruments, financial instruments, move beyond a key level. Now, what are key levels? Key levels are any point or any level, a price level in the market where a price encounters a barrier in common man's language. There's a hindrance. So that becomes a key level. So price can eventually break a key level and return back to the key level. And these key levels are typically areas where price has historically struggled, like I mentioned, barrier, hindrance, to move past in the past. Okay, so let's look at, if we want to analyze the chart for the past 1 week. So you can begin to see for a particular instrument, Euro USD, GBP USD, or any instrument or gold, you can check in the past, you can begin to see several price points where price encounters some hindrances, some obstacles, some barriers. So those can begin to serve as key levels for today. So we can actually begin to work around that. So for us to now use the breakout strategy, it means that we begin to beam our searchlight on these points, these price points that historically speaking, price in the market encountered some barriers, some obstacles. Okay, now, and these levels, when it is, when price gets to, maybe it's dropping and gets to a low key level where it encountered this barrier, or that low boundary or level there is called a support. While if it's rising and encounters similar challenge, that level is called resistance. And one thing we should also know is that price doesn't continue to go in one particular direction forever. It will, from time to time, correct. And that is why we need to really have a strategy for working in the markets. Okay, so let's look at the key concepts in breakout trading. So I've mentioned support and I've mentioned resistance. So let's look at support and resistance and then the breakout. These are the two major concepts here. So support, of course, I've just explained it, where when price is in a downtrend and it gets to that point, it pauses because there is a concentration of demand around the buying pressure is so much around the place where price that is falling pauses. So if for any reason the pressure is strong enough, it will push price back up. So that place is support. While resistance is a price level where as price is going up, it's expected that it will pause there because of concentration of supply or selling around that place. So that means there's enough, they've purchased enough and they want to now sell. So at that point, there will be a barrier, there will be a blockade, there will be a hindrance, a push back down. Now, so by the time price begins to do that for a particular period, go to maybe 90, comes back to 60, returns to 85, comes back to maybe 30, and keeps doing that over a period of time, then you're able to now find an area where you can say, okay, I can look out for a breakout of this, this zone. Okay, so that takes us to the next concept, which is breakout. So breakout is when price moves above resistance or below support with increased volume, because what can make it to break past any of these levels is that volume increases. Like I said, increased demand or increased supply. If the volume of demand rises beyond what supply can handle, then price goes up. And by the time demand is rising and goes up, gets to a certain level, and the volume of supply now surges beyond what demand can sustain, price begins to drop again. An instance that comes to mind quickly. Once upon a time, when the GSM network was literally new in Nigeria, there was a pattern I observed then, which was that, of course, then you know that the key players in Nigeria then, when you talk about the early 2000s, were MTN and then Econet before they began to metamorphose from Econet to V-Mobile to Zain before they became Airtel. And I observed then when MTN, particularly MTN SIM cards, used to sell for 17,000, 20,000, 10,000. Now see what was happening. Whenever MTN SIM cards, I observed that whenever MTN SIM cards rose, high in price, say gets to like 15K or 10K, during those periods, you rediscover that fewer people will make a demand for it because the price is high, particularly the low income earners. And when that is happening, price of handsets, telephone handsets in the market will drop. automatic because the demand for telephone handsets is low because the price of SIM cards were high. And then whenever the price of SIM cards dropped, because I remember it was time it dropped to maybe 600, 500, 1,000. When it dropped, you discover that the price of handsets will quickly shut up because demand for handsets has increased because there's there's also a high demand for the SIM cards. So demand for SIM cards will lead to a high demand for handsets, and because of that, the price of handsets will rise. And when the demand for SIM cards drop because of increase in the price of handsets will drop because demand for it will also drop. So that's just a way you can look at that. So when this begins to happen at a certain point, as volume now surges towards a particular direction, a breakout will occur, either to the upside or to the downside. Now we are going to be looking at how to implement a breakout trading strategy. We'll consider two categories of people here, of traders here. You have the pro for traders, beginner traders, and then you have the pro traders. So we look at how each of these categories can implement a breakout strategy, because I know whether you are participating in this presentation live or you are watching it later, it's either you fall into any of these two categories. Either you're a beginner or you are a pro already. And so, and probably you haven't really taken your time to want to check out the breakout strategy, and now you want to. So we will cover that shortly. So for beginners, first thing you want to learn is how to identify key levels. So, and you want to use historical price data to find clear support and resistance levels on your chart. We are going to implement that, but let's run through this first. And after that, you don't just rush into the markets. You want to wait for confirmation. You want to ensure that price closes beyond or below the key level, because false breakouts can occur. There's what you call false breakout. It can occur, all right? And therefore, you need confirmation. Confirmation is very, very essential, very crucial. And then you need to also learn to do volume analysis. And the simplest way you can do that is just to point the cursor to each particular price period and find the volume. The volume, after you see the open, high, low, close, below you see the volume for that particular period. We'll see that on the charts shortly. And then, so when you do volume analysis and there's a breakout, you want to check to be sure that this breakout was actually caused by a surge in volume. Remember, I mentioned that in the key concept when we talked about breakout, there's a surge, an increase in volume. So that increase should lead to a breakout that can be sustained. But when you check and the volume increase is either the same with the previous ones or not very significant, you might just be right if you say this could lead to a false breakout. So you stay away and wait because the confirmation is not yet complete. And then you now have to determine your entry and exit points. Of course, once you confirm your breakout, you want to make your entry, and then don't enter without also determining and knowing where you set your stop loss and your take profit orders. And of course, for a breakout that occurs on the upside, you want to set your stop loss a few pips, maybe 5 to 10 pips below the breakout point, or if it's on the downside, above the breakout point. We'll see that on the charts as we progress. Now I'm going to show us practical using a particular system to do that. So then when you have seen these things, the next thing is to practice as a beginner. Practice, do paper trading before you commit real capital. Practice with a demo account, gain confidence in identifying and trading breakouts, because the challenge of you being in a hurry to make money is that you keep on losing money and losing until you get frustrated. But if you take your time and invest quality time in practicing on a demo account, you gain the confidence in and be able to start identifying real correct breakout scenarios. And by the time you go live, even when it goes against you, you know that, oh, this is just one of those few times it could go against you. And then you look for an opportunity or rest and then come back again rather than give up. Now let's look at for pros or pro traders. So at this point, you want to consider advanced level identification where you could use technical indicators like moving averages, Bollinger Bands, or Fibonacci retracement levels to supplement your identification of support and resistance. And then analyze market context. For example, you want to consider the broader market context. We want to use fundamental analysis to gauge whether the breakout aligns with underlying market conditions. For example, you see, okay, a situation whereby some key market indicators, fundamental indicators from the US were released yesterday, and they all indicated negative for the US dollar. So if you see a breakout going against that direction, for the US dollar, let's now pair US dollar with the Euro USD, for example. So in such a case, price should be on the rise, right? So if a breakout occurs on the south, that means on the downtrend for Euro USD, considering that of recent now, the broader fundamental indicators do not favor the US dollar. And also, fundamental information from Europe also is favoring the euro. So if a breakout occurs on the south side, on the downside, that means going down, you want to say, well, as this is, I may think it's a breakout, and you could be right maybe 60% of the time, all right? So that you don't hop in hoping that it goes in your favor, only for it to all of a sudden turn the other way. But when it breaks out in the direction of the trend, yes, the indicators are not favoring the US dollar, and then there's a breakout to the upside, then you want to stick to that. All right, so then refine your entry and exit strategies where you could decide to use limit orders to improve your enterprises, where you've already analyzed and determined where it will happen and you want to enter the market. So you set up your pending orders and then use trailing stops when it needs to go in your favor to trail your profits as price continues to go in your favor. Now, on risk management, you want to calculate your position sizes, based on your risk tolerance and account size. For example, you have $1,000, you want to probably trade with 0.1, 0.2, 0.5, or maximum 1.0. Don't go beyond 1.0, okay? And of course, you need to also calculate it based on what the stop loss value is. For example, you have $1,000 or you have $100, then your stop loss is saying 20 pips or 25 pips or 30 pips or 50 pips. Okay, if it says 50 pips and you are using 1.0 for $1,000, it means that if it goes against you, you are losing $50. And $50, what percentage of 1,000 is $50? What percent of 1,000 is $50? That is like 5%. And the question is, are you okay with losing 5% of your funds, of your money, of your capital in one trade? If you are not comfortable with it, then what should you do? Adjust your position size, reduce your lot size. That's what it simply means. Okay, you have $100 or you have $10,000, and then you are accepted to lose $500 in one trade, not in one day, not in 1 week, in one trade. Is that okay for you? Yes. Depending on how aggressive you are as a trader, you might say, well, that's what I want, because if it goes in my favor, I can also increase my money that way. But make sure that it is something that you can tolerate. If you can't tolerate it, please don't use it. And of course, you can also diversify your breakout trades across different assets to spread your risk. And I'm going to show you a system that actually can also, one of the system can actually use to do all of this. So I'll just bring that system and put it together for us to see. Then you have to monitor and adjust your trades continuously so that whenever the market shows any sign of reversal, you too can adjust. So you don't just stay there and have your profits eroded. Okay, now let's look at common mistakes to avoid in breakout trading. Now, one of the major mistakes is chasing breakouts. So you want to avoid chasing breakouts. How does a trader chase breakouts? Once the market is quiet, or you need to watch, and once it breaks past that level, you want to hop into the market without even bothering about confirmation. That could be too aggressive. Set out parameters, set out rules that, okay, if there's a breakout, it breaks past this level, I need to wait again. If you are trading on 5 minutes, wait for another 5 minutes to see whether the next 5 minutes will close above that level. If you are trading with 1 hour, wait for another 1 hour. If you're trading with daily, wait for another 1 day. So these are the things you need to build into your system, which is yourself, so that you avoid chasing breakouts, so that you'll be using proper confirmation, so that you don't get caught in false breakouts. Then ignoring volume. Another mistake is ignoring volume. Many traders don't even check volume. Many traders don't even check volume. So you need to learn to start checking volume today. And I'm going to also show you how you do that without really going for any form of indicators. It's very easy to just point your cursor and you find a volume that could help you make a decision on that breakout. And then over leveraging. Don't also make the mistake because of over leveraging, because you think that, hey, once it breaks out, it goes in my favor. If you think like that and you put all your eggs into one trade, it could go against you, and you know what that could mean. It's easier to lose some and resume next time than for your entire account to be wiped out and you want to look for money to fund your account again. So that's why you need to be wary and careful of over trading, because trading large portions related to your account can result in significant losses. Like I've mentioned already, you have $100 and then you want to be risking $5 in one single trade, or you have $1,000, you want to risk $50 in one single trade. Is that okay? Is that acceptable? What can determine that is two things. One, your volume, your trading volume, your position size, your lot size, and the risk you're about to take for that particular trade. So in conclusion, breakout trading is a versatile strategy that can be adapted to various market conditions and trading styles. Now, by focusing on key levels, using volume as confirmation, and implementing sound risk management practices, both beginners and pros can effectively leverage breakout opportunities to enhance their trading performance. So now we're going to be looking at some examples. We'll be using one of our breakout trading systems to demonstrate this, and it's called the Asian rejection strategy. I'm going to quickly go into this to see. Okay, let me bring out a, all right, let me bring out, okay, if you can see the charts, you can just type breakout for me. If you can see the chart, the platform I just opened now, type breakout for me in the chat box. If you can see the platform I just opened, type breakout. If you can see the platform I just opened, type breakout for me. Let me see. Okay, great. Thank you very much, Alison. Thank you. All right. Now, this is a strategy, a breakout strategy. Now, there's a breakout, another breakout strategy that is, thank you, that is also close to this, called London Forex Flush. We used that in the early 2000s, but this is also close to it. And this is a very simple strategy that I can use anytime from 9 a.m. all the way to 4 p.m. And I'm going to show you how it really works. But before I get into that, I want to first off do something. Let me open the chart, and then let me show you some of the things I mentioned already. Okay, let's see. Let me put this on daily time frame first, and then adjust this a bit. First, let me show us, if you want to check volume, for example, you want to check volume. If you look at this, I'm going to look at 1, 2, 3, 4, 5, and then 6. So look at this 1, 2, 3, 4, 5, and then this is the 6th one now. If you look at this particular one, you see that yes, is bearish, right? And look at the volume there, 92,322. Go to the next day. Now, if you can see, just look at there from the top there, you see time, open, high, low, close, and then volume below it. All right. If you can see the volume written there, Could you type volume for me in the chat box? You can see volume. As I pointed this cursor here, you can see volume. If you can see volume, just type volume for me in the chat box. Open, high, low, close, then volume. You can see volume. Okay, great. All right, so like this one now is 92,322. But before I get it, let me even look at the one before it. You can see volume here, 96,497. And then the next one now drops 92,322. But still surprise here, 11. This one just 11. And this could have happened maybe, on skilling platform on Sunday night. The first few hours is breaks out as a particular day, just a few of the before the next day peaks. So that's how it happens sometimes. So that's why this one just shows the volume of 11, because at this point the volume was it's as if nobody was even in the market. Now look at the next one now, the bullish one, 77,787, and then followed by 93,905. Now, if you were to look at these two, let's look at, if you were to be here, for example, okay, just let's say you have you want to use this as your parameter for working on the breakout, okay? Then let's pick another one here, and then we put it here. Okay, let's say we're looking at between these two ranges, all right? Now volume here, 11, and then volume here increased to 77. And then by the time this one now opened, came down here, but then guess what? He didn't break the low level here, and he went up. And then he closed up here. He closed up here. And look at it, having closed above, in fact, where you even start with, because if you want to get on this now, it may be a bit late, but if you look at this one now, this one has closed above this. And if you want further confirmation, you want to wait for this to also close above it, above the level here, and you see it close above it. And the volume also is higher than the two previous volumes. This is 93,905. Okay, so this is your confirmation. So as this next one opens, you can actually have entered, maybe count 5 to 10 pips above this, and then as this one now breaks past that, you enter trade. Okay, and in your entry, where should your stop loss be? Below, maybe 5 or 10 pips below this particular one that you entered with, or below this one. So that could help you in your entry while you now target the same volume, or check out where the next resistance level is, in this case here. In this case here. Okay, so if you check that, so that means that if you are entering on this one, and that means you'll just be walking somewhere around from here to here, giving you around 300 something pips. Now, this is on a daily time frame, okay, and many of us may not be this patient to wait for a whole day to have a confirmation, except you're a position trader or a swing trader. So for a day trader, a intraday trader, you want to operate from the lower time frame. So in that case, you can go from 5 minutes, 1 minute, 15 minutes, or 1 hour. Okay, and if you are going by that, you can still find similar scenarios here. You can see historical price data from the past. At this point, you see that there was price rejection around here all the way to this point, and then here and that one below it. Okay, and so you are now working. Price is just dancing and dangling from resistance here down to support here, and so on. And so you are waiting for a break of below here or a break of above here. So as it breaks above this, look at the volume there, 1759. Look at the previous volume, 26. So you are careful now about this kind of breakout. You now look at the next one that follows, 1459. So you can see that this could turn out to be a false breakout for you. So at that point, you want to stay away yet, because the volume, look at the volume here, 2026. Look at the volume here, 2245. So it's reducing as it's progressing. Now here is 1759. 59. So you are worried about this kind of breakout. And if you look at it, you can see that the breakout didn't really happen, even though it closed up above there, and then it dragged itself. So where you can now begin to work on again, be on this one. We'll be on this one. Okay, and based on that, you want to also start checking. Let me project it well. You want to also start checking. Okay, so price breaks below here or it breaks above here. Now, if you look at this, check volume 3161, check volume here, 4214 is still within the range. But by the time this opened, all right, somebody may even miss out on this opportunity, but an aggressive trader that wants to go with it will go in bet. Because you want confirmation, you may miss out on it. You may miss out on it on breakout basis because you want to wait for this to confirm. And here it has already gone up here, okay, except for an aggressive trader or an experienced trader who already has seen that, okay, probably there's a news coming, because sometimes news can actually create these perfect scenarios. And then you now decide to use, limit orders or penny orders to take position before the breakout happens. In that case, that's the only way you can actually take advantage of this. Other than that, if you want to wait for, you may not be able to take advantage of this on breakout strategy. Any other strategy may work, but on breakout, no. All right. So that's just a few of that. But let me now introduce us to the system. We've talked about the system before. Now, what we do with the system is that you see here that this red rectangular line, this happens between the Australian session and through the Japanese session or Tokyo session. Okay, it happens with it all the way. Those two sessions, that should be Australian and Tokyo session, that's Japanese session, and the market is usually quiet around this period. So you can use this on the instruments you can see here. You can see GBP/USD, GBP/JPY, Euro/JPY, Euro/USD, and then these other ones others have tested it with, like AUD/USD, USD/CHF, USD CAD, and NZD/USD. So I'm going to be explaining using one of the instruments to explain how this really works. And then we check historical performance of the system. Okay, so what you normally will wait for is, this is what you want to trade with. For example, you want to go to bed, rest, wake up. By 9 a.m. is when you come to the market. By then, this circle would have, this rectangle would have completed. Okay, would have completed. And if you check the time here, this is 10 a.m. on the time frame on the platform, which is 8 a.m. local time here in Nigeria. So 9 a.m. is from here. So from here, outside this circle, sometimes if you come on this circle and this last one and you find opportunity, it might still go for you, right? But nothing is cast on stone. But we work with from here all the way to this. And so signal has to come for you between here and here, this last one. Monday, this is from here. So once it has taken the trade, then it can actually run through. Either it closes almost immediately, or it can run through till the next day. Okay, if you want to. If you don't want, you can pick it. But then how does it work? First, price would do all that it does during the period you're asleep. The market is quiet and calm. And then, because this is just an indicator, so it's, once you see, this is the level, the line up here, this is the resistance line, here's the support line. Once you see a signal like this arrow here, maybe this is like a shooting star or a pin bar, okay? And this arrow shows here, this is a sign that a signal has occurred. Now, when you want to check if it has occurred, it has to pierce through this line. It has to be at or pierce through this line. If it occurs in the middle, like this one, is invalid. Like this one is invalid. But at this point, is valid. So when you see it, first off, point your cursor, find the high, because it's on the upside, the high, and the high there is 0.60292. So what you do is to add 5 pips to it. Add 5 pips to that price, which is 0.602. When you add 5 to 9, because it's a 5-digit pricing, so we'll be working with the second to the last digit. So you just add 5 to the 9. So what you will now have will be 0.60342. That's adding 5 to the 9 here. You have 5 plus 9 is 4. So that means 4, 2, take 1 and then add to the 2 here. You have 3. So it becomes 0.60342. Now, what is that for? That is 5 pips above the high. And that is where you're going to place your stop loss. That's where you place your stop loss. Now, the next thing you look out for is the low. And the low is 0.60227. You deduct 5 pips also. And when you deduct 5 pips from the 27 there, deduct 5 from that. That's more like subtracting 5 from 12. That will give you 7. So, and then here will now become 1. So you now have 0.60177. So 0.60177. So you now have 0.60, have 0.60177. So let me quickly use this to plot it there. Just put this in here. And we say it should be 0.60342, right? 0.60342, yes. Then the next one here will now be 0.60177. 177. Okay, now so this is where our entry is going to be. This is where our stop loss is going to be. So what I just do is I'll use now. When you have seen this, nothing has happened yet. So you have ample time to take all these measurements. So I just put this here. That's 177. Okay, just have a fair idea, man. Just you deduct 2 from that mini price. So and then to this place, that gives us approximately 15 pips. Approximately 15 pips. Okay, so that is the same thing amount value you will target for your profits. This stop loss value is the same value you target for your profit. So approximately 15 pips. You can see it here. So this is where the take profit will be around here, 0.6002 thereabout. Okay. Now, so it will be a pending order. It will be a pending order. The pending order will now be, let me just quickly put the pending order. Pending order will be buy stop. So the type of order here you use here is buy stop, is stop orders, which is buy stop. And sorry, sell stop in this case rather, because it's selling. Sell stop. So we said the sell stop will be first off at 0.60177. Okay, and then the stop loss will be at 0.60342. Okay, and then the target will be 15 pips from there. That should be around 0. Okay, I didn't plot it, so I could just put the 15 pips somewhere around here. If I just walk 15 pips from 0.60, this is 60177. Okay, so deduct 15 pips from this, that should give me around 0.60127. So 0.60127, that should be 15 pips. So did I get that? Let me see. No. Should be somewhere around here. Okay, 15 pips should be somewhere around here. Okay. Yeah, this is 15 pips. Okay, good. That's it there. So while this is the okay, so now this one now is even a little above it. So just drag it back to this place to give you 15 pips. Okay. Okay, so that gives us the 15 pips. So we have 15 pips somewhere around here. You have 15 pips. So the target, the entry is here, the stop loss is here, and the target is here. So what happens is that if within this period between here and at the end here, which is about around 4 p.m., 15:00 here, around 4 p.m., around within this period, rather, if this does not trigger, you delete the order. That means it becomes invalid until the next day, and that one shows up if it shows up on these value instruments. And since there are an array of instruments, you can always scan to pick a trade or two. And there are times you may not see, because we're going to go through the history of this, and then we will see where it triggered and where it didn't trigger, just like this one now. Now you now see what happened thereafter. About 1 hour, 2 hours, 3 hours later, from here, this triggered. The same candle picked it and went all the way here, hit the target. Now, when it triggers, once it moves and you are watching it and it moves 50, that's 50% of the target. In this case, about 15 pips, or it would be around 7 to 8 pips. You move your stop loss from where it is to your entry, meaning at that point, the worst that can happen is a break even. So you move it there. And then if it, for any reason, it comes back there without hitting your target, you know that you didn't lose anything. And then you wait for another opportunity. So you have to begin to train your mind to let go and wait for another opportunity and not try to force trade. Because one of the major challenges we have as human beings, even in trading and business, is we try to force things when we shouldn't. Okay, so that's about that. But let's quickly go through history. This is how, this one I plotted there is just for this one. So let's go through history to see this in action. Now, let me just go a bit to the past. Like this one is the just first one I showed you, it worked. But even after it worked, this one now, you can see as it closes, as this one closes, you can see there's an arrow here again, show you can buy. So you want to wait for this to close. As it closes, you walk 5 pips again. But then the only thing is that this may not close that day, except you close it at 50%. Because if you look at the target for this now, the target for this, if you look at the high of this, 0.60269, if you add 5 there, it will be 0.60319. So if you put it somewhere there, around somewhere here, okay, let's just leave it there. If you look at from there to here, 5 pips, well, that's almost 35, almost 40 pips. Where is 40 pips there? You can't get it here, but you can get 20, even that day, you are unable to even get 20 pips. So, but if you get 10 pips and you feel that you don't want to let it continue, you can cut it. But if you want to let it continue, enter into the next day, you notice that even the next day, there was no signal on this. So meaning that by the next day, it finally gave you the profit if you were patient enough to leave it. But what if you're not patient enough? You could have cut it at 10 pips and let that be. But that is the system. So now let's go back again in history and check this again in action. Here, look at this one. This one happened inside the circle. So by this time, it's not yet time to trade. But by the time this one showed, it showed outside the square. So this one you would have already closed for the day. And then you want to keep going back to check if you find opportunity. And look at this one that happens at the last minute. And of course, this one closed in profit. You can see that it closed in profit. You see that. Now you go look at this one. Look at this one. There was a signal there, but it didn't trigger until the period passed. It didn't trigger. So once this crosses here, it didn't trigger. You're out for the day. So if you were here, then you would have said rather, you would have said it took the entire day, but then it didn't trigger here, so you are out. You delete it. Then this one happens inside the square, so you can't is already the rectangle, so you can't take it as a signal. This one happened outside of it. You can't take it as a signal. This one happened, it didn't pierce here, so it's a false signal. So that's for this. Now let me check another instrument. Let's check another instrument. Let's check GBP/USD, and I'll just check two instances. Now this is an instance here, but it didn't trigger. But if you look at this, let's see what I triggered or not. This one low here is 1.25533. So if you deduct 5 pips from that, it will become 1.25483. Okay, 1.25483. How about this one now? Did this one get to that 1.25? So it didn't even get there. So it didn't trigger. This one didn't trigger. So another one, this one happened in the middle. So it's a no signal, no signal, no signal. Okay, but there's a signal on this one. There's a signal on this. And look at it. This would have delivered. This would have delivered. So, of course, can you lose with this? Of course, yes. But what about the winning rate? The winning rate is over 70% if you stick to the plan. Just make sure you don't overtrade, you don't over leverage. This is one way to apply the breakout system. This is a system that can use to apply the breakout strategy. Okay, you can actually check other systems, and this system it can be available to you. Of course, you can reach out to Pipsoclock to get this system. They will just tell you the little condition. You are not paying for it, but I think you just have to fund your account and get some bonus from the broker skilling, and then you have the system to both demo trade it and trade it live. I think I want to draw the curtain at this point, so you can ask your questions. Thank you very much, and God bless you.
Thank you so much, Mr. Ifeanyi, for the session. Thank you for the presentation. It's time to answer questions. Does anyone have any question on what has been presented today? If you have a question, please let me know. You can put in a message, or you can use the icon. You can take advantage of and also skilling. And I would call on Bumi to please take this session.
Good afternoon, everyone. Thank you, Leka. Thank you, Mr. Ifeanyi, for the wonderful session. I followed all through, and I've, added more knowledge to what I already know. So I would like to take us through the bonuses we can enjoy from skilling and that of Pipsoclock. For our new clients who are here to make a deposit into your account. So I want you to know that you are eligible for a $30 welcome bonus, on skilling. And to do this, you need to make a deposit of $25 into your trading account. Once you do this, you get $30 addition, and all profits, made from this bonus. Please confirm if you can hear me. All profits made from this bonus can be withdrawn. Unlike some other brokers that will tell you to trade a particular lot before you can withdraw bonus made from bonus, but it's not like that with scaling. Also, in addition to that, Pipsoclock will, is offering 100% bonus exclusive for Pipsoclock members. So if anyone is interested in this, I would even encourage you to take advantage of it. Like, as a member of Pipsoclock traders community, you're eligible to get 100% bonus when you deposit either $50 or $100 into your skilling account. For example, to make a deposit of $100, you will get an additional $100 to make your capital $200, and then you can trade with. All profits made from it can be withdrawn without you trading to a certain number of a particular lot you get. So don't miss out on this opportunity to boost your trading potential or your trading capital, and then kindly share the Pipsoclock linking. If you're Telegram. If you're not already on the Telegram, this is it. https. So you have this link. Join us on the Telegram to receive signals. These signals are accurate. I use them also, and I make, money with it. So it's not all about customer service. I'm also here to make money too. And that is why I'm here on this webinar. So if you want to reach out to us on our email is help@pipsoclock.com, and our phone number is 02013306030. And we have a WhatsApp channel you can also reach us, on, which is, the number displayed on our screen. So for our clients here who are here to, they are here to activate your account. If you are here to verify your account, please do so. What you need is just 2-level verification. One is your ID card. And you can use any of this ID card I will mention. You can use a national ID card that is not up to 10 years of issue. You can use your NIN slip if it's not up to 10 years. You can use a voter's card if it's not up to 10 years. Okay. And if you have a tax card, yes, it's a new tax card issued by governments, yes, and it's the same name on your skilling account. Of course, you can make use of it. Then for proof of address, you can make use of your bank statement that has your name and your address on it, and that has the bank logo, and also ensure that it is not more than 6 months old for that bank statement. You can make use of your utility bill. However, the utility bill should have your name and your address on it. Okay, so I know what might be running through our minds are, what if I'm not the owner of the house? Yes, so that's why you have the option of making use of your bank statement. Thank God, it is your bank, so your name and your address should be on it. Then you can also make use of a court affidavit. If you are doing an address verification, that means the court affidavit should be address, should be a court affidavit that is addressing your house address, you get, because we have court affidavit for different things. So you don't just bring in any court affidavit that is talking about name for you to do proof of address. So it has to be a court affidavit that is talking about your address. And you can also use tenancy agreements. There are some apartments where you rent and then it's being handled by lawyers, and the lawyer will give you an agreement, like a signed, contract. So you should have your name and address on it. You can use that also. I encourage us to, log in with our email, activate your account now. There are other offers that will be coming up, and only those who are verified, who are fully verified, will get to hear of some of these offers, because that means it will be only for those who have, that access to it. So I encourage us, log in, complete your verification today, and then let's do business and make money. Thank you. I'll hand over to you, Leka.
Thank you so much. Thank you for that. Again, please be reminded that we'll have the next session next week, Thursday, by 12 p.m. And next week, we are talking about range trading strategy. Excuse me. So please be a part of it next week. You would also receive our emails and notifications so that you can join the session. These trading strategies, I want to tell you, these are strategies that traders pay huge amounts of money, for them to learn these things, but you have it. And in this, our webinar series, we are treating all these trading strategies. Please be a part of it next week and learn from it also. Someone is asking for the recording. Yes, the recording is going to be available. It will be available in the Pipsoclock member area. You can access the Pipsoclock member area by going to pipsoclock.com/member. Pipsoclock.com/member. It will be available there. The recording of the last Thursday's webinar is already there, and you can get access to it and watch that recording. Let me quickly pull it up so that you can see how it looks like. And okay, so this is the Pipsoclock member area. You can access this by going to pipsoclock.com/member. So you go to pipsoclock.com/member, and then you can go to academy, and my courses. Sorry, resources and webinars. So you go to resources and webinars. When you go to resources and webinars, you see the recording of all the sessions we've had before now. And for last week, where we talked about trend following strategy, yeah, you can definitely watch the video there. So you find the recording of the video there. So that's how to access it. Likewise, for this session, you're going to find it inside that member area. So we have come to the end of this session for today. I want to appreciate every one of you for taking the time to be a part of this and for staying till the end of the session. Thank you, Mr. Ifeanyi, for sharing that knowledge with us. And thank you to other members of our community that have been a part of this. If you like to get the entire package for this breakout trading strategy, please send an email to us, help@pipsoclock.com. We'll send you all the setup details that you need to have. And of course, the requirement is very simple. You just make sure that you have deposited into your account and even take advantage of the 100% exclusive bonus. That bonus is exclusive to members of Pipsoclock. So you can get that bonus and then get the entire setup for the breakout trading strategy. Thank you, Mr. Al-Azan Abubakar, for being a part of this. Thank you, Mr. Davis Isaac, Comfort Boucher, Abigail, and the Pipsoclock member using TechnoSpark 4. Thank you once again for being a part of this. I hope to see you next week, Thursday by 12 p.m. And you would get the invites and every other details in your email. And also, if you are already on our Telegram group where we share our signals, you also get the notification on that platform. Thank you and enjoy the rest of your afternoon. Bye.